Okay, good afternoon, everybody. Today is Friday, the 5th of August, 2011, and it's been a long, tiring week, and I'm not sure how long this show is going to go on today. Fortunately, I don't get paid to do this because otherwise I would feel bad. I think we're going to have a quick show. I am exhausted, and I think probably anyone who's been involved in this market is exhausted. Hopefully, you didn't get your ass kicked by the market because it was a very easy week to get that done. We had some really interesting moves here, and obviously massive volatility. Where all that talk about the Head and Shoulders, and I said on Tuesday that there was so much talk about that Head and Shoulders that maybe it just seemed a little bit too obvious that we were going to see from a failed move lower that we had a fast reversal higher, or maybe there were so many people looking to fade that breakdown that it was going to actually come true. So what we had, of course, on Wednesday was that hammer that everyone was talking about, and I was joking around today saying, "Look quick, there's a hammer on the daily chart." But someone had said to me yesterday, "Oh, I've seen this picture before, down on massive volume, big fear." And I said, "Yeah, we saw that 2 days ago, and today we had even bigger volume." So the point about the volume is that, again, only price pays, but the big volume or the biggest volume doesn't necessarily mean it's going to be the low, because we had bigger volume every single day for the last 6 days in a row here, and so far none of these have proven to be a bottom of any kind. We were down 18 cents today. It was obviously a super volatile session. We started out with that gap higher up towards daily R2, daily pivot rather, and got hit from there and down. This is the second time this week that the daily S2 level came in within about 10 cents of the low for the day on the S&P 500. So if you're not looking at pivots, or you think that pivot analysis and that sort of thing is something that trades aren't programmed around, they're very similar to they're similar to any technical event or indicator, like a 200-day moving average or a 50-day moving average. There's enough people that look at them that they tend to be self-fulfilling prophecy, but not all the time. It's not a system, it's a tool. It's something to look at and say, okay, when it gets down to that level on the daily S2, then I'm going to maybe start to take a look to see if this market can make a higher high. I'd spoken midday actually about this right in here. What happened, and I don't have the MACD chart right here, and I'm too lazy to pull it up right at the moment, but we had a MACD divergence. That is, we had a lower low in the SPY, but the MACD had kind of looked like, if you take a look at the zero line, the MACD would have looked maybe something like this and made a higher low. That is, diverging. While the market makes a lower low, the MACD made a higher low. And a lot of times I found that once you make a 10-minute after that, then you can buy with a stop below the low of the day. Well, I took the trade and mentioned it on Twitter and took a loss. So it's like any system or strategy, the most important part of a strategy, you realize, is some type of risk management. I could have held it and held it till the end of the day and it would have worked, but to take all that heat is not my personal preference. In other words, this market broke down. I think it was 118.85, I think, and it got down as low as 117. There was no way I was going to risk a dollar 18, a dollar whatever it was, 85, to at the end of the day make a few pennies, or just have faith, blind hope in this market that has so far just fallen off this cliff and continues to accelerate. And you could say, well, we closed down only 18 pennies today. We closed up on Wednesday, but a brutal week for the market. I don't think, for some reason, my volume isn't updating properly here on the weekly chart, but this is the biggest volume we've seen in quite a while. So I'll have to look into why that hadn't updated. We lost the trend line this week, and we lost this support, and that really, sometimes I look at these things and go, maybe that's too obvious, and it feels too obvious in the moment, but at the end of the week on Friday, you look at it and say, well, all I had to do was this or that. And, that's human nature to kind of look back and say, if I had only done this, or maybe I should have done that, or I should have held this. The market has been just so volatile. It's really messing with a lot of people's minds. And that's the as I was saying yesterday, the cruel nature of the market is that it's going to mess with people's minds in a big way. And the main thing that I've been emphasizing here throughout the week is that if you're going to take trades, they're extremely they're extremely high risk. That is, if you're going to take long trades, and despite having a long, which is really kind of stupid too. I admit it, but I played some of the bounces. I think I made more money on the long side, which is kind of shameful to me than I did on the short side. And it's shameful because the trend was obviously lower, and I talk about trend trading all the time. But the money's going to spend the same, and if you're not getting hurt and you can trade in real time on the short term time frames, you have to figure out what your strategy is. But when we have that, the emphasis I was trying to say was when we have a declining 5-day moving average, as we've had, we want to look at this market on the intermediate term as guilty till proven innocent. We don't want to look at it as something that, okay, we're going to catch the bottom here. If you caught the bottom today down at S2, so far so good. You have what looks like a higher low. Next week we'll be looking hopefully for this market to be holding 119, and maybe we can start to carve out a pattern of higher highs and higher lows. We can draw some different trend lines here and say which one's most pertinent. Well, they're all going to become important. In this 122 level, we can see now where we had a little bit of support intraday, midday Thursday became the resistance on Friday. Today we kind of we're struggling with that daily, 2-day volume weighted average price. But what we're going to want to look at to make it a little bit more clear here is down there about 119. Hopefully we can hold above that on Monday. And if we can do that, then maybe we begin that process of carving a little bit higher. But still, it can't be trusted for a longer term hold. As I said, and someone wrote it on Twitter today as well. Is there still going to be enough meat left on that bone that you don't have to pick the turning point? Because how many times have we this week most of the honest people on Twitter and trade, most of the honest people will tell you that they did try to pick the low, that they did try to pick a low, or not necessarily buy into the weakness necessarily, but at least try to use some type of strategy like a MACD divergence, or like a bounce from the S2 and catching a nice move like that, or as it gets back above volume weighted average price. There were some good long side trades in there, and when the market gets this far extended in one direction, as this market has, I'm of the risk averse nature, and maybe that it seems too far too fast. I don't want to buy aggressively into it, but I want to, and I don't want to sell short because it just seems like, who the heck, who's still selling down here? What are you thinking? Why were you not selling at 133 or even 130 when we broke that important level that we that was so clear, that 130 level? Why would you wait 10 more S&P points lower to sell your long holdings? And who on earth would be think it's a low risk idea to sell short down here? I don't know. I mean, you have to again look at it from your personal standpoint. So that is your risk parameters and what you're willing to accept in terms of what time frame you're trading on, and the bigger picture. We've been dealt a severe blow. Now, this on the weekly chart, we've got this bigger level up near about 125 and a half, 126. When we look at the daily chart, of course, that's basically the neckline for this head and shoulders pattern. The way a head and shoulders pattern is supposed to work is you get a return move, they call it, and then what happens there? A return move on a lighter volume return move, and this will generally this prior support will generally act as resistance and can be used as a level to short against. Let's see how it plays out next week. A bounce up to 126 would be a hell of a nice little bounce here. And if that happens, then you have to look at it and say now's the time to be cautiously long. Every long trade I took this week was extremely cautious. None of them were okay. This is the bottom. I'm going in. This is just stupid. It's down too much. I gotta back up the truck and put my nuts out there and make my stand. This is how you do it and get rich. That's how you get thrown out of the business. Basically, this is how that's how the people who are going to be looking at it this weekend saying, maybe the market isn't right for me. Maybe maybe it doesn't always bounce back, and it's time to go back to just the general principles and stick to them. One of the best and most consistent guys on this stream that I want to give credit to is Joe Fahmy. He's done a great job. So Joe, you're doing a great job for people. Follow him, Jay Fahmy. And there's a lot of other people who are getting it right in here too. I don't mean to exclude anyone, but there's just there's all this indecision in the market, and to have the discipline to just stand aside is a very unusual trait and something that develops by getting the shit kicked out of you once in a while too, by making those mistakes. Let's take a look at the NASDAQ. The NASDAQ, we lost that 57 level where the 50-day, the 150-day, and the 100-day moving average were clustered together. We were talking about that level that if 57 broke, then maybe there's an outside chance we would drop down towards this 55.5 level. Well, boy, you can't look at those levels and say that's where support is. That's a potential level of support. Support, resistance, they are only known after the fact. You do not know what it will be. There's just guessing. There's technical analysis is not about saying that's the perfect place to buy. Instead, it's about saying that's the perfect place where I'm going to start to really take a close look at the intraday action. Drill down a little bit further here and see if this is where the buyers are actually showing up a little bit. Is the supply not being brought to the market as aggressively? And the answer was no, that didn't happen. So this, what people were thinking was potential, and I was thinking was potential support. That's why we use the word potential. Just as you can't buy a stock because it has a 10 PE and the PE was 30 2 years ago and now it seems like a value, you can't just buy at what prior resistance is. That's not what analysis of the markets are. You have to have a complete look at it in an objective way of saying, wait a minute, maybe I'm just seeing part of the picture here. And anyways, the NASDAQ deeply undercut today, these lows for the year as well. We had massive volume in this market, but is it the biggest volume of this move? We'll know Monday. If we trade bigger volume on Monday and we're down further, you just simply don't know that this was climax volume. This is what they thought. Yesterday people were saying it's climactic volume. It's big volume, but if we have a bigger volume day on Monday, then it wasn't a climactic sell-off. We do have somewhat encouraging near-term action. That is that this level near about 53.30, this is what has the potential to become a higher low. If we break today's highs, then we'll probably bounce up towards that 5-day moving average. And again, it's still guilty till proven innocent. We're deeply oversold. These snapback rallies occur. They're high risk. They're very appealing, from a sideline standpoint to say, oh shoot, I knew that was the volume. Look at the big, or I knew that was the low. Look at the the big volume it did. And it's going to be perfectly obvious where the low was on Monday or maybe Tuesday or 2 weeks from now, whenever this market makes its bottom. But right now, you can't have any conviction that this market has made any kind of near-term volume. Near-term low that's going to hold. This is encouraging, and the fact that we have that higher low just below that level is even better. So about $53.30. That'll be an important level for the Nasdaq next week. Russell 2000. I don't know why I was so tired. Talking about the markets energizes me. So we'll go a little bit more here. But we broke this head and shoulders pattern in here as well. We broke down below that important 77 level, and from 77, we at the beginning of the week we were looking at, well, if 77 breaks, what's the ridiculous level that it might sell off down to? And I was thinking about 74. That would be kind of ridiculous and probably a good level where we would get a bounce from. But it doesn't mean a level to buy at. It means let's take a look for support in that area. And we just simply, we didn't find that support level. The market continued to reveal weakness. And this is a hell of a red candle. And, you get those big red candles. Sometimes the next week, in the next couple of weeks, you continue to get those big red candles. There's nothing here that says this is the bottom, or something that's going to bounce. What would be encouraging is to take out these highs from today. Not necessarily today's highs. I think about the 73 level. Taking out 73 on Monday, we're a stop right down near about 71, so a 2-point stop. This is what we can start to look at and say there's the potential for a higher low, but it's just not convincing. It's not worth risking your career on. It's not worth risking your IRA. And people say, well, I'm putting it in my IRA, and they think, well, the IRA doesn't matter because I have longer term objectives. Your IRA is your most important account. That's the one that's got to be there for you in 10, 20, 50, 30, 50 year. I don't know who has it. If you're 20 and you have an IRA, good for you. But if you're, when is that your IRA should become more meaningful and more valuable by each day you get older, because it's one day closer to your retirement, and that's where you're going to need that money, and you want it to be as big as possible. You don't want to take these stupid risks with it by just putting bets in on the market. And I saw people saying, "Hey, I'm taking a bet on this trade." Maybe it's just me, but you don't take a bet on a trade. Those words don't mix together. If you're going to take a trade, you have an objective, you have a plan, you have some discipline. If you're going to gamble, go to Las Vegas and gamble, but don't call gambling trading or trading gambling. They're You look at what I got to watch it again, but I talk sometimes about that movie Rounders, and Matt Damon at the end is talking to his girlfriend who just doesn't understand what he's doing playing poker. He goes, "Listen, do you think it's a coincidence? Do you really think it's gambling? It's the same 5 guys at the winning table every year, at the winners table every year. Do you think those guys are just the luckiest guys there are? Everyone's going to have their streak of bad luck, but if you're disciplined and consistent in your approach, you're not gonna get yourself in front of the train as it comes rolling down those tracks. You're gonna jump out of the way and say, "Hey, that looks dangerous. It doesn't look as appealing to me as it did when I was a young kid," or whatever. I don't even know what I'm talking about. The semiconductors broke that $32 level, and as we were talking about, and somebody asked me, I think on Wednesday, the more times support is tested, the more likely it is to fail. The sellers were getting more aggressive price-wise with these lower highs. The sellers were getting more aggressive time-wise as the time between those tests diminished, and that's where we finally had that push lower that failed and failed miserably. Sometimes I look at these trades and I say, "Oh, I can't sell it short below 32. That's too obvious." Sometimes the obvious trade is the absolute correct trade, and sometimes I feel like a jackass because I'll sit there and say, well, the next trade below 32 should be the big one, or the one that really gets the fear into the market. And look at that big sell-off, and I'm sitting there with my thumb in a stinky place, not taking advantage basically on the short side as well as I should have. But anyways, I hope the analysis helps you guys see things more aggressively or more objectively rather. Same thing goes true for the financials. I mean, they just kept hammering away at support. We had that false move first, and that's what I was talking. I was thinking, well, we're going to get that false move, and then get people confident that this bounce is going to work in the SPY, and you start to outthink sometimes. And there's no doubt about that. That I talk about being objective and listening to price only, but we have our little biases that we build in, whether we want them there or not. And anyways, that's the way it goes. I don't know if I wrapped that up conclusively, other than to say we're deeply oversold. This might be the climactic volume, but Monday we might see bigger volume. So just continue to maintain always a strong defense. That's really my main message throughout every video I've done. Defense wins the game. Whether you're in a runaway bull market or you're in a market like this one, if you're not able to preserve your capital for the times when you're in sync with the market and the market is giving you the opportunities to take advantage of, you know, that's when you have to be there, fully engage with your equity intact and be able to take advantage. If this isn't the market for you, and it's not, I think, for most people, the market for most people to be involved in, continue to enjoy your summer and have a nice weekend. I'll talk to you again next week. Thanks for tuning in.